fundamental reason why gold and silver, especially gold, is rising is the robust central bank buying. So the central banks of major countries around the world, like Poland, like China, not all of them, but some of them, buying gold. Now, it's not, up until now, it's not been a huge rush, but bear in mind that the numbers we get are very, very heavily lagged. So we're only just now seeing the figures for July or August, in some cases only up to June. So we don't actually know what they're doing this month, but I suspect that central banks are now starting to feel that they're in competition with each other to get the gold. Because we all know that there are worries about holding dollars, for example, due to the weaponization of the dollar, due to the fact there's not been any action to rein in the US debt. The government debt is getting bigger and bigger. It's growing by 6% a year. It's probably going to be growing by 7% this year.
One of the most significant periods of modern financial history is upon gold and silver, one that is characterized by structural truth rather than hype. Gold is being used by central banks worldwide as the ultimate hedge against monetary failure as global debt surpasses $37 trillion and inflation subtly reduces purchasing power. Respected financial analyst and strategist Clive Thompson cautions that both metals are currently enmeshed in a historic revaluation process. He thinks the days of false stability and price manipulation are coming to an end. Silver's increasing shortage threatens to unleash a squeeze never seen before, while the gold market is displaying symptoms of strain as physical supplies tighten. According to Thompson, this is about the inevitable return of real money in a world overrun by credit and paper promises, not about short-term trading. If you want more content on precious metals investing, be sure to like, subscribe, and click the bell.
And that is the precious metals market. So as this news was breaking on Friday, in a flight to safety, driven by this uncertainty about tariffs, some investors, a few investors, not too many, bought gold and silver. Now, gold and silver market is a much smaller market than the stock market, so it doesn't take a lot of money to move the gold and silver prices. So the gold and silver prices continued the rally they've been having literally all year. They continued to rise higher. So on Monday, that's yesterday, spot gold surged through $4,100 an ounce. It's the highest price ever. It was up 2.21% on the day. Now, gold doesn't usually move that much. It's there's a lot of liquidity in gold. It moves up 0.25% or down 0.25% on a good day. So a 2% move is, as gold stands, it's a huge move. So up 2.2% on the day yesterday at 4,100, and I can tell you that as we speak now, gold is continuing to surge. It's 4,100, and guess what? $45. Another 40-something dollars up. By the time you see this video, in maybe an hour or so after I've made it, could be God knows where it'll be. But bear in mind the warning which is coming. So silver was an even more amazing metal, but it's not the most amazing metal I'm going to get to yet. Silver surged above $51 and then above $52. For all I know, it might be above $53 now. We'll have a look at that in a second or two. So silver was up 3.1% on the day. Another absolutely amazing move for a precious metal which shouldn't be moving all that much. And so where is the silver price now? Let's just have a quick look at that. $52.95. So it's gone through $51, $52, and it's on the cusp of going through $53. It wouldn't surprise me by the time you switch this video on that it's above 53. We don't know. So what are the factors driving precious metals higher? I just ask you, can you think of anything why would people buy gold? Any idea? Maybe? Yeah. Well, I can tell you a few things. We've got the US and China trade tensions going on. We've got geopolitical uncertainty everywhere. Geopolitical uncertainty is when people are worried about wars or other bad things which happen in politics. We've got the expectations of the Federal Reserve interest rate cuts. What that means is interest rates they will be reduced, and if they're lower, then the cost of holding gold is less, because if the interest rates are high, you can put your money on deposit and earn interest. And if you're earning 5% interest, you might say, why would I buy gold? It has no yield. But if interest rates are 2%, well, I can give up 2% for the possibility of making a gain in gold. So lower interest rates are generally perceived as good for non-interest bearing assets like gold or silver, or Bitcoin for that matter. And the other, perhaps the most fundamental reason why gold and silver, especially gold, is rising is the robust central bank buying. So the central banks of major countries around the world, like Poland, like China, not all of them, but some of them, are buying gold. Now, it's not, up until now, it's not been a huge rush, but bear in mind the numbers we get are very, very heavily lagged. So we're only just now seeing the figures for July or August, in some cases only up to June. So we don't actually know what they're doing this month, but I suspect that central banks are now starting to feel that they're in competition with each other to get the gold, because we all know that there are worries about holding dollars, for example, due to the weaponization of the dollar, due to the fact there's not been any action to rein in the US debt. The government debt is getting bigger and bigger. It's growing by 6% a year. It's probably going to be growing by 7% this year. We're at 37 trillion of debt in the United States, and that should grow by 2 trillion next year. And the interest element, the interest that the government's paying on that debt, is getting larger and larger and faster. So just to illustrate that, a couple of years ago, the US was paying about 8% of its tax receipts in interest. Now, because interest rates on the maturing debt are higher, and also because the debt itself is higher, the interest cost is getting on for 18% of its tax receipts. And according to the Congressional Budget Office, if you crunch their numbers and look forward as to what they're projecting, in a few years it'll be 22% of their interest. So we're talking about interest costs being literally a quarter of everything the government gets in taxes, and that figure probably is set to continue going higher ad infinitum unless something is done. And that will be the subject of another video about what can be done and what will be done. But what I can tell you is that we might go into a new system at some point. There might be a series of steps. I've got several which I see as possibilities. But whatever happens, I can say that, and people are realizing this, gold is what can get you to the other side of whatever's coming.
The current spike in industrial and precious metals suggests a significant change in global capital flows, which goes far beyond temporary market euphoria. Palladium has gained more than 5%, platinum is up around 4%, and copper jumped 6% in a single day, its biggest advance in months. Rising demand in China, where enormous investments in power grids, rail networks, highways, and infrastructure are still accelerating, is largely responsible for this momentum. At the same time, a developing long-term supply shortage is being fueled by the Western world's explosive growth in artificial intelligence and data center construction. This restored strength of metals is a potent reminder that tangible assets are the foundation of true worth. One thing unites gold, silver, and industrial metals. Their value is determined by practical application and scarcity rather than paper promises. These assets serve as both protection and an indicator of where trust is subtly shifting as uncertainty increases in international trade and finance. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
I did say that gold and silver weren't the best performers, so let's talk about the better performers, and it gets better still in a minute. So platinum and palladium were not left out in the precious metals rally yesterday. Yesterday, platinum rose 3.9% to $1,648, and palladium rose 5.2%, that's a lot, to $1,478. But it gets better. Now, this is not a precious metal, but one thing which did rise in the commodity sector was copper. Copper surged 6.02% on the day. It's up 9.3% on the month, which isn't quite as much as other things, and 16.66% year to date. So copper is severely lagging all the other precious metals on the year to date. But yesterday's move, there was a bit of a surge. And why was the surge in copper happening? Well, the answer is simply strong Chinese demand. I can tell you that across China they're building new motorways, they're building new railway lines. The demand for copper is huge coming out of China. And of course we've got in the Western world huge demand coming from all these data centers, which they basically need a lot of copper to get well, you've got a lot of power going into the data centers. It's like powering an entire city, some of these things. So yeah, that takes a lot of copper wiring. So the demand for copper is not about to go down, and maybe copper will be the new gold. We will see, but don't try and buy the physical bars. They are very heavy. And here's a little story for you about something which happened once when I was working. Now this happened, maybe 40 years ago, maybe 35 years ago, when I was working in a wealth manager in Switzerland, and one of my colleagues, I was a team leader at the time, one of my colleagues came to ask me to sign off on a transfer to Indonesia. It was a large transfer, maybe £1 million or something like that. And this was from a client living in the UK. And I said, that seems a bit odd. What's going on? He said, I don't know, we just got instructions. I said, well, you've got to find out. It doesn't feel right. So I rang the client and asked him to explain to me why he would be transferring £1 million to Indonesia. And the way he put it was, my best man, my servant, somebody who I've been friends with all my life, he's been working as my employee all the life, is out in Indonesia, and he's found an opportunity to buy gold bars from a very elderly tin miner guy. He's got a tin mine and he's got all these gold bars he's been storing up for decades, and he doesn't want to sell them, but my friend will take them to the Indonesian central bank, who will buy them from him for the market price. So there's a huge profit in it, but I need to have £1 million sent over there for buying the gold bars. And I said, well, I think this isn't real. It doesn't sound real. Why would anyone sell gold to you for less than the real price? Why doesn't the guy just sell them directly himself? He said, oh, there's some special reasons I can't go into, but this is real. And I said, well, how do you know? And he said, well, I trust this guy all my life. I know him. He's the most honest guy I've ever seen. I said, well, to be honest with you, I don't believe you. I'm not going to stop you sending the money, but really, I'm trying to give you a warning and a couple of days grace to try and think about it and see if you're really serious, because I think you're going to lose 100% of your money if you send it. And he said, no, Clive, I'll send you the evidence. And I said, okay, I'll wait for that. Anyway, he sent me through a photograph of the guy carrying these large size bars. They're about that size, and he had a stack of them, like a little pyramid in his arms. Now, I don't know if you know anything about gold. If this was gold, you wouldn't be able to lift it. That would have weighed several tons. It's like we're lifting a car. He wouldn't have been able to lift it. He's holding this triangular stack of gold bars in his arms.
A ton is 1,000 kilograms.
That's right. A ton is 1,000 kilograms. It's like huge. And each of these bars, if it was real, would have weighed. It looked like perhaps 40 kilograms a bar. And he probably had 20 of them, so that'd be 800 kilograms, nearly a ton. Maybe, I didn't add it up, but the fact is, it could not have been gold, because otherwise he wouldn't be able to hold it. So I wrote back to this guy. I said, I don't think this is gold, otherwise you wouldn't be able to carry it. Either it's chocolate bars, or it's copper bars. And he wrote back, no, it's definitely gold. Anyway, so he then wrote a letter. I said, look, I don't want you to lose your money, because you're going to lose it. And he then wrote a letter of complaint to my management saying, one of your officers refuses to comply with my instructions. It wasn't that I was refusing, I was trying to give him time to think. We can't refuse an instruction to pay clients money, but I was trying to give him time to think, not lose his money. He wrote this letter, very rapid letter, to the boss, the head of the bank, and the head of the bank said, he's had his warning, you've warned him, send the money. I said, well, I was going to do it anyway. So we sent the money. Well, you can imagine what happened. Have a guess.
He lost his money.
He lost it all because it wasn't gold. I don't know I haven't got the full end of the story in total. Well, I have, but I won't say it here. But the long and short of it was, all the money he sent to Indonesia, and this wasn't the only payment, it never came back. He lost it. So when something seems too good to be true, it's not true.
Did it say it would come back?
Well, he believed he was going to get back the money plus a big profit. But yeah, it never came, of course.
Clive Thompson concluded his talk with a message that was both inspirational and sobering. His research focused on what those figures actually meant for the world economy and regular investors rather than just charts and numbers. The increase in gold and silver is more than just a speculative move. It's a sign that people are losing faith in government debt and paper money. A subtle but significant change in the global financial system is revealed when countries, not just people, begin vying for gold. Thompson's caution regarding overbought conditions is intended to urge investors to remain realistic and consider the long term, them rather than to frighten them. Although markets usually change in waves, anyone who pay attention to the greater picture, the structural debt issue, unrelenting money printing, and geopolitical instability, will see that these price fluctuations are only a small portion of a much more significant shift. According to him, gold and silver are insurance against a flawed system rather than merely investments. It is impossible to overlook the significance of physical, real-world assets as the US government continues to wallow in debt and central banks lose more and more power. The lesson is clear: sound money endures, but paper promises might not. Therefore, long-term investors should concentrate on the destination rather than the roadblocks, whereas short-term traders might be concerned by corrections. According to Thompson, gold and silver are more than just commodities. They are the lifeboats in a turbulent sea of debt, inflation, and unstable finances. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.